Welcome to our channel BFSI. If you're new to the stock market and want to understand how it works, you're in the right place. Today, I'll break down the basics of the stock market in a simple and easy way. By the end of this video, you'll have a clear idea of what the stock market is, how it works, and how you can get started as a beginner. Before we start, make sure to hit the like button and subscribe for more informative videos on investing and finance. The stock market is a place where shares of publicly listed companies are bought and sold. Think of it as a marketplace where people trade ownership of businesses. If you buy a company's stock, you own a small part of that company. Companies list their shares on the stock exchange through a process called an IPO, initial public offering. Once listed, these shares are available for trading in the secondary market. The price of a stock depends on supply and demand. If more people want to buy a stock, the price increases. If more people sell, the price drops. There are different types of participants in the stock market. First, we have retail investors, regular individuals like you and me. Then, there are institutional investors, large organizations like mutual funds, banks and insurance companies. Next, we have traders, people who buy and sell stocks for short-term profits. Lastly, we have long-term investors, people who invest in stocks for years, expecting growth. There are different ways you can invest in the stock market. You can buy stocks or equity, which means buying shares of individual companies. Another option is mutual funds, a pool of money managed by professionals to invest in different stocks. Then, there are ETFs or exchange-traded funds, a collection of stocks traded like a single share. And finally, you have bonds, a safer way to invest where you lend money to a company or government. Starting your stock market journey is simple. Follow these steps. Step 1. Open a demat and trading account. This is where your shares are stored. You can open one with brokers like Zerodha, Upstocks, or Angel One. Step 2. Research stocks. Always study a company's financials, management, and industry before investing. Step 3. Start small. Invest a small amount initially and learn as you go. Step 4. Stay updated. Follow financial news and market trends. Step 5. Think long-term. Avoid panic selling and focus on long-term growth. Here are some important stock market terms every beginner should know. Sensex and Nifty. These are stock market indices that represent the performance of the top companies in India. Bull market, when stock prices are rising and the market is doing well. Bear market, when stock prices are falling and investors are cautious. Dividend, a portion of company profits paid to shareholders. Market capitalization, the total value of a company's shares. Many beginners believe in stock market myths. Let's bust some of them. Myth 1. You need a lot of money to start investing. Truth. You can start with as little as 100 rupees. Myth 2. Stock market is gambling. Truth. It's about making informed decisions based on research. Myth 3. You can get rich overnight. Truth. Investing requires patience and long-term vision. Common mistakes to avoid. Investing without research, panic selling during market dips. Following stock tips blindly, not diversifying your investments. Investing in the stock market is one of the best ways to grow wealth over time. But remember, always do your research, stay patient, and invest wisely. Thanks for watching.